to price. They're agnostic to price, right? So,
Yeah.
but they'll put other asset prices at prices you never thought you'd get.
Right. And they attacked that night. They attacked it. You could go back and read articles over that weekend. So they went after it and then the silver crowd, those who trade in the dealers and such, beat the hell out of it. You could see how it came off following that. And they took a beating that night. And I said, that's an interesting thing, because it showed me that they're used to pushing stocks. And that's what they did. They had, with Robin and a few things the week prior. So they had a great week, and they tried to push the same thing with the metals market by noting that it was in severe imbalance with a shortage of silver. Didn't last long. So and I have no problem. You know what? You want to go on Reddit, you want to go social media, and I'm not criticizing that. But I'm only pointing out, understand that which you don't know. See, they think that they know everything. And
I don't want them to understand everything, Ira, because otherwise I don't make as much money.
Yeah, that's right. But they need to learn that lesson. But they don't like.
They do, and that's not being a mean fucker. Because frankly, I want the world to be much more equal. And I love the way you call the Fed of social justice, because they fucking.
Oh, he was there again. You know what? I don't know if it's going to be enough to push him over the top, like a lot of people think. But the Reddit crowd does not like being criticized.
No, but they're kids, right? And look, I didn't like being criticized at 35 either. And they'll learn their lesson, and that they think they know everything because the market's only gone up.
Right.
They'll learn. And look, while the market went down last year, it went down for 2 months. Let's face it, right? It didn't go down for fucking 2 years, or back in the day when people really learned pain, 15 years. So subsequent to that, we'll see. And I mean, I'll put 2 charts up, Ira, that we looked at before. That, to your point, really, or Judd will, is the Nasdaq bond chart against the Tesla objective chart. Now, this is stuff that is gold. When you look at Tesla meeting its objective and the Nasdaq bond does an outside reversal lower, I mean, seriously, that gives you confidence to shift your portfolio to other assets. Because at the moment, I don't think you're not going to make money if you just say generically long. You need to find the markets that are blowing off. Right. We're blowing off the money. So I think it might be marijuana stocks now going to come back relative to other stuff. But at the same time, the only way you're going to get that is if you do the work within the internals to find the spreads that are starting to fail.
Well, I think that some people who are writing it, and maybe Bookvar, I think, had this too, and Peter's been really, really good with this, is that I think commodities, if it's Brainerd, that's a point that I think commodities will get a lift off, because I think the dollar is going to weaken. And I think Lael Brainerd is far more astute in judging the dollar here. And I don't think Powell gets it, by the way. It's just my point. And proof of that the Fed, or certain people at the Fed do understand the role of the dollar. You better go back and look to see what that standing repo facility is all about.
Yeah, it doesn't mean the market can't collapse on itself.
No, right. But it's there.
It just means the cycle goes faster because they then step in quicker, right?
It's just there for that. That is there for a reason, because they understand that if the dollar goes up, you are going to get liquidation of certain assets.
They need to relieve the pressure of the world reserve currency on other people, right?
Exactly. And so if you need to raise cash, you can do it without disrupting the bond market, because the Fed will will take as collateral basically all you got, because each European institution that is eligible is good for $60 billion in repo. So if you need to raise that much cash, you have the high quality collateral, in most cases treasuries, You give it to the Fed, and they'll give you cash, whether it's overnight, whether it's a week. So this is all in place. There are so many things here. So many.
It's the reason why we do this, because it just it keeps you thinking all the time. What time's your daughter's presentation?
Well, she's going to be in it, so somewhere between. Arizona doesn't change its clock, so I have to get myself repositioned here because now I'm only an hour behind Chicago. So she is 3:00 New York time. So
14 minutes time.
So you got 14 minutes.
So we've got 10 minutes. So
yes. So
the last part that I want to quiz you on is the bond market, right? So now I'll send you that article that on the gas line through Michigan. I thought was amazing.
Oh, I love that. I read that article. 5 line. I read that.
Yeah, do you know of Grant Williams?
Yeah.
Yeah. So Grant interviewed the guy who wrote that, and I'll send you the link.
Oh yeah. What's that? I know the guy. I read that article. The guy.
Yeah, Judd sent it to me, and it's free for everyone to subscribe.
Yeah, I think I sent that to Judd yesterday.
It's
doomed. I subscribe to it, Ira.
Oh, you do? I didn't know that. That was a great article.
Yeah. So the guy. Yeah. Anyway. So on the bond market and Bookbar, I shouldn't call him Bookbar. I don't know him. Peter, Mr. Bookbar, was very eloquent in his analysis of once you taper historically, the market's yield curve flattens, right?
Yeah.
And then you got the confluence or confusion of the Fed buying tips, right? So, is the bond price? I guess my question is the bond price reflecting what Lacey Hunt thinks or what the Fed's doing?
I can't answer you. I don't. I am really perplexed by it. That's Andrew. That is the penultimate question right now for all the markets.
Yes.
As you can see by the returns by the major players in the market,
they've been smashed.
And Brevin Howard, and who's been better over the last 20 years trading bonds than Alan Howard? Nobody. I'm talking about people who trade them.
I 100% right, and but those guys. Look, I'm not going to be disrespectful to anyone that's and I don't know him. I've never worked there, but the amount of inside knowledge those guys got, you have no idea.
Oh, you know what? I don't. You're right. So therefore, I can't go there. But
what I prefer to see is people that actually are respectful of people's money and not respectful of their own egos.
We're right, but here, like classically yesterday, right? We heard from Philip Lane, the chief economist of the ECB. I think this guy is operating, and I've thought it for quite a while. I didn't know about Kaplan and Rosengren, but I believe that he's as inside as anybody, and he leaks to Reuters. But if there's a guy who's so off base and his analysis is always crap at best, it's him. And yet he's out there pushing the same shit, and he gets to grab the headlines. And then, we had Isabel Schneibel. They just keep chasing themselves. And when Lagarde puts Powell into a bad situation, which I think she did, and she also put Andrew Bailey of the Bank of England in a bad situation, which is why, to me, as I wrote in the blog on Sunday, the Brits didn't raise because they don't want to be the first one out and have the euro sterling drop to 82, right?
Which to your point in your blog, which I think you were saying very subtly, is that this market's not finished yet, because it's only going to finish when they take the fucking sauce off the table.
And I have a solution for them, by the way.
Oh, do you?
Yeah. Yeah,
What?
I'm going to tell you exactly how. They always talk about how, with the G7, they're accomplished this. Well, right now, meaning tomorrow morning, they should hold a G7 finance minister and therefore a central bank, because the central bankers, of course, partake too. They should hold a meeting and agree that on tomorrow's Wednesday, on Thursday, they all end QE together. Now let's find out what the market's about.
Yeah, but your solution is ideology. It's not reality.
Of course. Well, no. I would put it in the conflict in the same bucket as the Plaza Accord, right?
You read. Well, look, that's where. Well, hang on. You read what I wrote last year about myself halfway through the year, right? So
Right.
I was kind of there then, but I agree with you. The Plaza Accord will occur, but not before this carnage.
But I know you're right.
Now, to everyone in the room, that doesn't mean you sell the S&P right now, right? Because the S&P, I still think it goes up, but I do think there's sectoral shifting going on. Everything's blowing off. Judd's got your back, but none of us want to be around for the crumbs of the pigeons. We just do not, because there's going to be a lot of money. I think you make more money if you got some access to credit to the next drawdown than making money at the moment. Does it make sense?
Andrew, I agree 100% with what you said. To try to figure this out, see if they would put their egos aside, really.
They don't.
They can't. I know, but that's what they need to do. And it's almost like, heading into some type of Bretton Woods, but you need to stop it all together on one day because they're so afraid of each one being left holding the bag, so to speak.
I agree with that.
Yeah, and they don't want the currency volatility with one doing it and the other one not.
Right. So if they would announce an end to QE, because it does nothing anymore, okay? It does nothing but continue to puff up various assets.
No, it just distorts financial assets. It's all.
That's all it does. That's all it does. So,
but the one. Okay, so as much as this has been a relatively depressing conversation, let's because you only got 5 minutes to go. The hope is are your daughter and Judd's and anyone else in the room generation of that. Frankly, I've got nephews and nieces that of that generation that are less greedy and are just more environmentally aware and less generationally impacted by previous generations. So we have to get through the cleanse of the current leadership of the world, I think, and hand it over to them. I think that's the savior. I think that will be the solution. Unfortunately, there'll be some pain to get there.
yeah. That's.
Would you agree with that or not?
Yeah, no. This is we are in a very tight situation, and that's why I say at least if you pulled back altogether, then you could let markets work, right? Whatever way they're going to go, they're going to go.
Yeah.
They will eventually.
Well, yeah, you've got it. It's the market's manipulated. So as
You're
long
right.
as it's being manipulated, you trade the manipulation.
You're about to go for 3 minutes, but at the same time, you remain. I mean, you don't need to disclose your positions, but you remain as a result of the recent Fed meetings, ECB meetings, BOJ meetings, SMB meetings, constructive of the market.
What are we talking about? The equity markets?
Yeah, generally, yeah, just asset market, financial assets.
I just don't think it can go anywhere. It'll go up. It'll go. It's just because people, again, where are you going? You're going nowhere. So, and most people just can't get themselves to take any money off the table. Me, as it goes higher here, I'm taking money off the table. My sense is if I miss out on another 5 or 10% on what I'm taking off, I don't care. This has been such a phenomenal run for so many things. And I'm trying to hold on to more of what I deem to be value stocks, and Judd and I've talked about, it's like, now I'm trying to look at who's really going to gain in an ESG dominated world, right?
ESG being environmentally strong.
Yeah. And
Well, isn't it carbon credits, uranium, and what's the other one?
right. No. Yeah. So I'm
Well,
trying.
yeah, and there was the thing last night too, that they're back in the GE mini reactors.
Yeah, right. Yeah, I can't believe how, you know what, I it's interesting. And the European pressure reactors. So there's a lot of discussion about this, and you could see it from the uranium stocks, number one. But there's so much stuff going on, and I keep looking at, and I wish somebody would do some work on this. Ezra, this is right up your goddamn alley, and Angela, on ABB, which technically looks interesting, but more important than technically is what are the underlying. I think ABB with its 120,000 employees is so well positioned for the coming quote unquote green revolution and the finance that comes with it. So am I rushing it to buy it? No.
What's ABB do?
The biggest engineering company, I think, in the world, but they're so set up on major league projects of such importance to the green revolution. I think
Right.
it's a very, very important thing. And for those who are, and it's to me a reasonably priced stock for those who are going to have to place companies like that into their portfolios, so they're not just greenwashing, but actually lowering their carbon exposure, right? Because they're going to have to offset that. And so I'm just playing with it. I'm not, I've had an investment there for a year and a half, 2 years, and it's been fine. But now I'm really looking at it because,
The company,
listening to what came out of the,
You gotta use 32 as your risk.
yeah, which it broke
the
that.
company that I've gone with that on, I know you need to go, but is a company called Carbon Stream Corporation. It's a company that I know Paul Jones has taken a decent stake in.
What's the name of it?
Carbon Streaming Corporation. It's called
No, I don't
Carbon
know that.
Stream. So
You'll send me an email about
I
it.
will. But for anyone, it's not listed on the NASDAQ yet. It does next year, but it's listed on a minor exchange in Germany. But it basically buys carbon credits from forests in emerging economies and sells them to high polluters.
Well, I will have a conversation with somebody who ran the Chicago Climate Exchange, Richard Sandor, who's, God, if we can get him in here one day, that'd be a great conversation.
Well,
I'll let you go at 7 o'clock.
Yeah, I gotta go.
all right. See you.
All right. Okay. Thanks. Thanks, Andrew.
No worries, mate. Take care.